Hi, this is Brian Icenhower, and I'm here to talk to you a little bit about how we as real estate agents can get help with an increasing demand on marketing costs from different affiliates and vendors and other businesses to help us be able to afford to market both our listings and our own businesses out there. And what are some of the best practices for getting marketing dollar contributions from affiliates? And oftentimes, we as real estate agents don't realize the importance of looking to these affiliates for contributions. And it's being done widely out there, whether you know it or not. Um, for example, we have a lot of clients that are generating anywhere from even in their first year in the business. A lot of our coaches have clients that are generating anywhere from $2,000 to $5,000 per month from affiliates to help subsidize the cost of their marketing expenses. Many of the top teams we coach in the country are getting around $25,000 per month contributed to them towards those marketing costs. And the more and more that I talk to people, the more often I see that it's not being taken advantage of. And quite frankly, with the advance of technology, we are seeing an increasing need to spend money in marketing. That's contrary to a lot of what people would thought with the increase in technology, but we're seeing marketing costs go up. And we're also seeing an increasing opportunity window open up to get contributions from affiliates in the business that become a win-win for both parties to succeed together. So you'll see those all over the place. And so when we talk about who these affiliates are that are helping out, oftentimes it's the mortgage lender that is the most significant contributor by far. Mortgage lenders tend to stand to make a lot of money from an agent's business. In fact, mortgage lenders typically do market to agents more than they even do to the general public. So they are your target, just like listings might, or you are their target, just like listings and buyers are your target as a real estate agent. But really, most of the low-hanging fruit that you would be going after out there would be settlement type companies that are involved with the closing of each sale. And that could be anything from an escrow officer or a title company or a title closer, depending where you live, home insurance company, fire, hazard insurance, home warranty companies are big contributors out there, natural hazard disclosure companies, title insurance companies, all of those get very, very involved with the closing of a sale. And in addition to that, we can move outside that group, as a lot of people have found there's a lot of marketing dollars out there from CPAs or accountants, attorneys, even furniture stores, car dealerships are big, big contributors. Moving companies are a very big contributor for a lot of our clients as well, too. Financial advisors, especially those that are commission-based financial advisors, tend to have a little bit more marketing dollar and more of a marketing mindset out there. Notice that larger companies tend to be better than smaller companies. Larger companies have very large marketing budgets, and believe it or not, these are things that are done all the time, from manufacturer to sales in a lot of different industries, whether it be the furniture business, the moving business, car dealerships. Very common to do joint marketing with the end user. In this case, it's the real estate agent that's actually selling the property that generates all the sales, which is why a lot of agents are realizing that, and they're tapping into those resources. And as real estate agents, we are very much the center of the front line on the referral spider web. Where we have the power to refer a lot of business. People come to us, they move to a new area, they look to us for who to use for all of these things, who to go to for a dentist, who to go to for a local accountant. And so we have a whole lot of power of referral. And if we actually get affiliates and vendors that provide good customer service to us, that's of course important. We're going to send a lot of business, and oftentimes agents just forget to get business back. They just assume that, the good customer service is all they're going to get from that relationship. And a lot of people are willing to contribute to your marketing efforts with the hopes that you will generate even more business through that marketing. And then they ultimately will trickle down and get more business as well, too. It makes a lot of sense. Now, do understand when we're talking about the settlement closing companies, sometimes we do run into, and oftentimes we'll run into different federal laws like RESPA. And we need to make sure that we are being very compliant on that. So I will say that. I mean, if you have a lot of concerns about that, do check with your local attorney or check with your broker. Most brokers should be up on that. They should be up with those laws and rules. So check with them as well too. However, when you do deal with these larger companies, like larger mortgage companies, title companies, et cetera, they typically are used to it, and they do have their own forms that you can use. So I would use their forms, and they almost always have them, whether they say it or not. You got to go up high enough. Understand that if you're dealing with just the loan officer or just a sales representative for one of these companies, typically if you get up to a branch manager, an area manager, a regional manager, or something like that, they're very familiar with this topic, and we can actually educate the sales rep on it too, because there will be some payback. You are asking for money, so it's not surprised to get some pushback based upon compliance. But make sure that you follow through with that, because usually if you do move up the chain, they will start to learn that there is a compliant way to handle this, and that the higher ups in the company definitely know how to get this done in a way that's compliant, and using their forms is always a better way to go, right? So very important to do there. They'll almost always be able to get your own agreements with that. A lot of different ways we can add value here to them, but let's start with the first way. And we have to be careful how we do this too, because again, the reason there is a lot of compliance issues around this is because we don't want to be in what is often perceived as a kickback situation. We do not want to pay, let's say, a mortgage company based upon, or get paid because we gave them business. So we don't want it. That is where most of the compliance rules have come around. So we don't want to ever base it that way. However, a mortgage lender is going to kind of think of it that way. I mean, you would too. If someone comes to you and says, "Hey, I want you to contribute $3,000 a month towards my marketing expenses," they're going to think, "Okay, well, if I'm giving you $3,000 a month times 12 months, that's $36,000 a year. What am I going to get in return?" And all of a sudden, it just evolves into that conversation, at least a thought in their mind. Okay, I wonder how much business they're going to give me. So it's very important that when we talk about their return on investment, it's not tied to the payments aren't tied to a specific amount, because we can't do it that way. At best, we can take a look at it a year from now and maybe have a 1-year agreement and see if it was a worthwhile investment for them. Having a conversation about how that might work will help your understanding of the process as well too. You see, if we talk about, a lot of people are surprised and don't know what mortgage lenders make, but they typically do quite well. And it's understand that when you're talking to the loan officer or the loan originator, the mortgage lender, it's a lot easier if we can get into a conversation with the branch manager, regional director, or something like that, because the bank actually makes a lot more of the commission than the loan originator does, the loan officer. So whereas a loan officer might make somewhere around 1% on the loan amount of a loan. So let's say we've got a $200,000 loan. They might make 1% of that. Okay. However, the bank can make anywhere from 4 or 5 on government subsidized loans like FHA, VA, et cetera. They're making 6 to 7% on the loan amount, and that starts to add up to a high dollar amount there. So oftentimes the loan officer alone won't pay out of pocket. We need to get most of our contribution from the bank itself, and banks are set up to spend large amount of marketing dollars that way. And then it just becomes an ROI conversation. Like if we know someone has a $300,000 loan amount, and they're making, let's say, 6% on, the bank is making 6% on that loan amount. All of a sudden, we're talking about making $18,000 on a loan that you give them, whether that's shared with the loan officer or not. That's the contribution that you're providing to them, because they're making 6,000 per 100,000. 300,000 is 18,000. By them contributing $3,000 a month to you, that's $36,000 over a course of a year. Heck, if they're making $18,000 per loan, that means they only have to get one referral from you to get their money back, four referrals from you to double their money, six referrals from you in 1 year to have a 3-to-1 return on their investment, which is excellent. So if you can provide that, all of a sudden, you're going to subconsciously have an obligation to support this lender who's supporting your marketing costs. Now, again, we can never tailor compensation structure that way. This is a return on investment conversation. We're going to circle back at the end of the year to see if it was a worthwhile marketing investment for them. But having any type of compensation structure based upon that is deemed as what's commonly called a kickback. And we don't ever want to do that. But business is business, and they are going to have that thought process in their mind. So again, that's why we're going to use their forms and have their policy and basis for how much they will pay you based upon the marketing activity that they're receiving and the exposure that they're getting to the public. But having that conversation, now sometimes you have to actually enlighten the person you're talking to, especially at the loan officer level, to even understand how that works and why that their own branch manager might be willing to entertain this deal because they're going to make money. And it's okay to have a conversation about making money. Again, I am not your attorney, so please go see a local attorney if you have any concerns about that, or lean heavily on the lenders to watch their own compliance and your compliance through their own agreements as well too. Okay. So very important thing there. One thing you can do also to locate, again, the bigger companies in your area are typically the ones that are very familiar with this. We all know Zillow is a big online lead source for many people and a rather expensive one. But you'll see they are actually set up to have a preferred vendor and a preferred lender with each account for this very reason. In fact, if you want to see who the big players are in the game, all you have to do is go to a listing on Zillow and start scrolling down to the bottom of the listing, and you'll see a preferred vendor down there. And when you see that preferred vendor and see which company they work for, you'll see these guys are contributing towards marketing costs, sometimes directly with Zillow, which makes it really easy. Zillow makes the money go from the lender right to the marketing because, generally speaking, these companies can contribute towards marketing costs. That's not a problem. And if you take yourself out of the mix and have them pay a company like Zillow directly, wow, that makes it even cleaner. And Zillow does that. So, but you can also use it as a tool to spot which companies are contributing. And then you can go approach those guys because they realize there is a high return on investment on that. And they do realize that it takes money to make money. And the bigger companies will actually spend the marketing dollars to get a very good return on investment relative to most businesses out there. And then it's just a matter of you picking up the phone and giving that lender a call and saying, hey, you're looking for people that, businesses that are growth minded. They want to grow. They're not just only watching expenses. They're looking at the net income off their investment. So you become an investment more than just a cost. So reaching out to them and just letting them know that you noticed they had a co-marketing agreement with a particular agent, and you wanted to reach out and see if they would be willing to invest in your business. And, you might be helpful to show them some stats about your business to explain to them exactly what it is, how much production you're generating, how many leads you're getting, to show where you're planning on going. If you do have a lot of leads, if you do have a lot of business, if you do have a lot of listings, whatever makes you're going to need to sell them on your vision so they see that you are going where you're going. And show them. And again, this is, we can maybe do this 1 year at a time so we can circle back and make sure that you're getting enough business and exposure from this to make it worth your while. And you are going to have to try to get them business. They're going to have to see that their marketing activities work, or it's not a fair win-win both ways. But you'll usually find you can do that very, very easily. So very important. Now, there's a lot of other things we can add through this referral network too, if you really want to highlight this system and grow the system even further. And a great way to do that is to kind of create a referral partnership with them, whereby we start to actually market them to our clients as well. If you give out gift baskets, if you don't, this is a great reason to give out gift baskets, right? Because you can take all your affiliate partners, and hopefully you have a lot of these, right? You have a couple mortgage lenders, you have multiple, you have an attorney, you have a CPA, you've got a title company, you definitely have a home warranty company in there, and you're actually giving them coupons and discounts and advertisements all mixed into this, this housewarming present to your new clients, or your gift basket to your new clients at the end. So they're getting exposed to it. There's a lot of apps, mobile apps out there that actually have vendor networks in them. So even though your clients or prospective clients might be using it to search for homes, there's also all your preferred vendors in there. You might have them on a preferred vendor sheet that you give to every one of your potential clients as well too, with your listing packet or your buyer consultation packet as well. Very important. They can have coupons, rebates for all these lenders in there a lot too, to show them that exposure. Oftentimes on your agent website, you have a client concierge or preferred vendors list page on there with maybe links to all their vendor websites as well. So these are all ways you can just augment your referral partnership system to further support and justify that marketing agreement back and forth with your vendors as well too. So I hope these are great ideas, because please do this, because you're missing out on that, learning how to actually have the ROI conversation, and starting to develop this referral network. Actually, a very important part of any agent's sphere of influence by referral business is to generate that referral network from us. If you want to learn more about how some of those specific techniques work, like building referral partnerships, how we can set up preferred vendors list, how to contact them, how to initiate those conversations, go to our training website, therealestatetrainer.com, and use the little search bar and type in some of these keywords, and you'll see lots of preferred vendor lists you can use, scripts and dialogues you can use. All these different tips, tools, the different apps you can use to share with your clients as well too. We give that all away to you as well too. So thanks again for joining in on this, and all of us at Icenhower Coaching, we say thank you, and talk to you soon.